If you're trading Forex in 2025, you're missing out if you're not watching commodities. Two of the biggest movers, gold and oil, have the power to shake entire currencies. But here's the real question. Which one is more profitable to trade in the Forex market? Let's find out. Let's start with gold. In the Forex world, it's traded as XAUUSD, gold versus the US dollar, and it has a reputation as the ultimate safe haven. When inflation spikes, banks print money, or the world enters crisis mode, gold becomes a magnet for investors.
In the world's financial markets, fears over the spread of COVID-19 have led to a widespread sell-off of risky assets.
Meanwhile, the safe haven of gold has hit its highest level in 7 years. Analysts say that the rising trend in gold prices is likely to persist as the epidemic shows no signs of abating.
During COVID in 2020, gold exploded past $2,000. In 2022, as inflation ripped through the economy, gold surged again. But gold isn't just emotional, it's fundamental. It moves with interest rate decisions, real yields, and global uncertainty. Gold often moves opposite the US dollar. When the Fed cuts rates or prints money, gold usually rises. Gold is great for trend traders. It forms clean patterns, reacts well to news, and respects technical levels like support, resistance, and Fibonacci retracements. Now let's talk about oil, the wild card of commodities. It's not traded as a currency pair, but it's deeply linked to Forex through oil-backed economies. Countries like Canada, CAT, Norway, and Russia rely heavily on oil exports. So when oil prices rise or fall, their currencies follow.
Well, in the USA, the price of oil has collapsed to a record low as demand dries up and storage runs out. The price of a barrel of West Texas Intermediate, which is the benchmark for US oil, today traded as low as minus $40 a barrel.
In 2020, oil crashed to negative prices for the first time ever. In 2022, it soared due to the Russia-Ukraine war. Why? Because oil is tied to OPEC decisions, geopolitical tensions, and supply-demand shocks. It's chaotic, it's fast. And for short-term traders, that can mean big profits or big losses. Pairs like CAD become super sensitive to oil moves. When oil rises, the Canadian dollar strengthens and USD CAD usually drops. So if you want fast-paced, event-driven trades, oil gives you action. So which one should you trade, gold or oil? Gold is perfect if you like trend following and macro moves. Oil is for traders who thrive on volatility and breaking news. Gold gives you clean setups and safe haven demand. Oil gives you wild spikes, high-impact trades, and connections to energy-driven currencies. Want to win big? Use both. When inflation hits, trade gold. When OPEC speaks or a war breaks out, watch oil and trade oil-linked Forex pairs. Are you team gold or team oil? Let me know in the comments. I read everyone. And if you want more powerful Forex breakdowns like this, subscribe to Learn FX, hit that like button, and turn on the bell. We post every Thursday and Sunday. Stay ahead of the market.